what happens in bear markets. And what I mean by that is that, we saw the Terra Luna situation. We saw the UST collapse. Anything that's not made to be on a firm foundation, ultimately in bear markets, it's shown to be faulty, right?
Hello crypto lovers, welcome back to Crypto Studio 247, where we regularly bring you expert views and opinions about the latest cryptocurrency updates. Do yourself a huge favor and watch this video until the end to not miss out on any important information. To learn about all the latest crypto trends. If Crypto Alpha is what you love, please subscribe to our channel and turn on the bell notification.
So now we're seeing Celsius. I think they're not allowing withdrawals right now, which is sending shockwaves. I mean, that's the equivalent in the crypto space of in the financial system. If a bank said, hey, you can't withdraw your money, I mean, that is not a good thing. What you can see here is that there's this little interim support right over here at around 23,000 or so. And that's kind of what we've been dangling right on top of. So that's your short-term support on Bitcoin. I ultimately still am holding strong that I think at the high end of a target, you're talking about this 20,000 marker here. So I still think we're going there. But again, generally, you don't go straight to these levels. It's very rare to see a collapse from where we were, at 32,000 or 31,000 a few days ago or a week ago down to 20,000 that quickly. Usually you get to a level, you bounce a little bit, then you flush again. Ultimately, I still think that we could go as low as 12,000. 12,000 is this pivot going back to 2019. One of the reasons why I think you could go that low, there's actually a few. Number one is it's a measured move. So if you take this distance from this high to this low, which was basically a straight shot down, and then you do a measured move, that same distance from here, let me zoom out, from here, it takes you down to 12,000. This would be the same distance repeating, which again, in technical analysis, it's called a measured move. It's some of the symmetry of stocks and charts and crypto. And then the other thing to keep in mind is that 12,000 also is the 80 to 85 correction move, which is a standard kind of Bitcoin crypto winter, right? So again, 20,000 is my high end. That's where I start kind of accumulating a hodl position where I plan to hold it for a little bit longer. But what I'll do is I'll divide my ultimate max that I want to buy into about 5 portions. So let's just say for Pete's, for example's sake, it's $100,000. I would do 20,000 at 20,000. And then at maybe 17,000, another $20,000 worth, et cetera, all the way down. So again, there's lots of ways here. I'm still a long-term huge bull. This is kind of exactly what I was expecting. It's the .com flush out. You need to see 95% of cryptos honestly go away during this next 1 to 2 year period. It's why I've said so many times when I invest in cryptos, I generally only invest in the top 20 because the top 20 hopefully will still be around to tell the tale, just like Amazon back in the .coms. Obviously, that one flourished afterwards. But I mean, it is nuts out there. There's no doubt about it. It is painfully nutty out there. And investors don't use leverage. I mean, that's just the bottom line. You use leverage in a bear market, you're going to get slaughtered. Notoriously, when I'm accumulating, like I did a little buying of Ethereum today, I put 4% additional in my portfolio of Ethereum. That's it. So I do have about a 20% position in my portfolio of Ethereum here for a bounce. Here's your Ethereum chart. And again, you can see how it's leading Bitcoin. It's already taken out the 2017 highs right here. I think you have a couple levels coming up. The big one for me is going to be this $800 level right here. That's going to be a very, very big support. So again, basically below 1,000, I really start to think that there's good value here if you can say a cryptocurrency has value. No one thought it would go here. I mean, we were almost at $5,000. So at $1,000, you're basically down 80% on Ethereum, and we're getting awfully close to that, trading at 1225 right now. So yes, it's nasty, but again, if you're someone that has that long-term vision and you're not using leverage and you're trying to build a long-term accumulation portfolio, then you start to nibble. You start to nibble just a little bit, and you kind of say, okay, listen, I understand that these positions could go down 50%. That's just the crypto market, right? Even from here. But if you have that view of long term, then there's a lot more reward down the line on these good quality names. And I'm not going to compare what's going on with Celsius or UST necessarily to like a Bernie Madoff, but that's when you were when Bernie Madoff was discovered was when the bear market in 2008 began, right? Because he could no longer just fabricate the X amount of gains that he was on paper, because people were saying, oh my goodness, the markets are crashing, I need to pull money out. Well, guess what? Celsius is finding the same thing right now. They've stopped allowing that. So, I mean, really, bear markets expose the weak hands or the fraudulent hands, and that's what you're starting to see. And it makes a lot of sense. I mean, the crypto market is probably one of the shadiest unregulated markets out there. So in these type of environments, those bad areas are going to get exposed. Everyone wants the big player. I mean, it's so funny, right? You know, you see, and this has always been kind of the double-edged sword for crypto, is like no one wants it to be, everyone wants it to be decentralized. No one wants these big institutions to control so much of it. But then when you get into bear market, everyone's like, oh my goodness, I hope the institutions come out and save the day. And it's like, well, in this environment, like you said, the institutions are not, this is beyond their risk tolerance, right? Yeah. They're already cutting back risks by selling Tesla and selling some of these tech stocks. They're not going to come in into something that's dropping by 20% a day and step in at these levels. Now, at some level, hedge funds who really do take risks like that, they will step in, but they wait for, the absolute collapse. They'll wait on Bitcoin to sub 20,000, probably even sub 15, like you're saying, before they step in. People are just so insane when they do this, especially in a bear market. When you're going counter trend to the market, you literally dip that toe in the water. So you're talking about, 4%, 2% of my portfolio, what I'm putting at risk initially, and then maybe I'll add another 2 or 4%. But you're not going like 10 times leverage in, praying and hoping that this is the bottom, because that's how you go broke in a bear market. And again, things have changed. Investors have to understand that the days of 2021 are now gone, because the Fed has said, sorry, guys, we are not continuing to print money. And the government is in that same position. You don't have enough people saying, okay, let's do this spending bill or this spending bill. And so all of a sudden the spigot's been cut off and the market's kind of left naked, if you will. The one thing I will say is so the inflation numbers are ridiculously high right now, but the Fed has to be very careful here, because you are seeing consumers starting to recoil like they just touched a burning hot stove. All right. Again, so far we're still seeing, we're always hearing, the traveling, because COVID's, kind of down and over at this point. But I'm telling you right now, from what I'm seeing, people aren't driving as much as they were, because, it takes $120, $130, $140 to fill up your tank just for a few days of driving. Right. And then you also have prices that are ripping higher. We know that housing has been just going nuts. So people can't afford that with interest rates where they are. And there's this massive recoil that's starting to take place, and it can force us into a recession far, far faster than anyone thinks. I went on record, I think 6 months ago, saying we could easily see a recession start by the end of 2022 into early 2023. And I think that's going to happen.
Thanks for watching. Until next time, smash up the like button, leave a comment below, and we'll see you tomorrow, friends.